I see your charts. There you are. Welcome back, Mark.
How are you, Dale? Thanks for having me. How's everything?
Good. So some changes in your life, huh?
Yes, sir. No, I folded my business and I joined up with Tom Lee and joined Fundstrat in the city.
Oh,
So I'm in New York City now.
so congratulations.
Yeah, thank you. No, look, it's always tough to scale a business when you're one man. And,
Yeah,
COVID, if anything, I
I've
learned
tried
that
it.
it's very difficult to, COVID with nobody's in their office, everybody's at home. It's just tough to really build it, and so everything had sort of flattened out. It had a number of really good years, but then, this just sort of landed in my lap. And these guys have been looking for a technician for a while. So I'm happy it worked out. So yeah, it's
This
great
may
for
be
me.
one of Tom Lee's best calls, bringing you on. How
Tom
about
Lee's
that, huh?
been very right on the markets for years. So to his
Yeah,
credit, yeah, it's
yeah.
I talked to him back in November. There was a certain cycle that hit, and I said, there's a good chance that we could start to pull back. And he was kind enough to mention me on CNBC. So yes, I do a lot of
Oh,
CNBC myself, but it was
you
nice
do.
to try to get that exposure right away from the get-go.
All right. Well,
Anyway,
I think that anywhere you go, you add value. How about that?
I appreciate that. Thank you.
All right,
So
so
yeah,
we're
let's.
looking at value line, kind of like
Yeah,
is it
this is
analogous to the Russell
well, this
a little
is
bit?
1,700 equal weighted stocks
Yeah,
versus S&P. So this actually peaked out in the month of June, and I thought this is just
yeah,
important to show because technology has been so dominant in the market really since the month of May, where the broader market really has not kept up. And then we saw a
yeah,
number of sectors try to break out and they all failed and everything has sort of pulled back. So,
yeah,
it's sort of an interesting market to say the least right now, where you've seen a lot of damage. This moved to the lowest level we've seen since March.
yeah.
And a lot of the popular breadth gauges have really nosedived. We saw the percentage of stocks above their 200-day move down to almost 50% from in the 90s. So when you have, only half the stocks that are above their 200-day when the market's within 5% of its highs, it means we're in for sort of an interesting period.
Okay, I know when you use interesting, it usually means that there could be some surprises.
Well, look, I think we've seen a little bit of a surprise, but it hasn't
Yeah,
really impacted the S&P all that much, as we all know. I mean, that's only
yeah,
down 5%, but anybody that's not owned, Apple and
right.
Microsoft knows that it's been a lot more painful than maybe what this chart shows of S&P. And so, I think everybody's sort of sick of seeing all that holiday red on our screens, and it's so early in December. It's not. It's a very strange time of year where it feels very different than most Decembers, where things just sort
Yeah,
of melt up and everything is
December's
good.
a new October
Yeah, that's right.
with thinner volume, so it's easier to move things around.
So
I
yeah,
mean,
we've had our first, decent push up after our little drawdown, and I'm actually expecting that we're going to sort of give back a lot of what we've done in the last 24 hours. I'd be surprised if we actually push back to new highs right away. Yeah, I know the
okay,
breadth was decent, about 5 to 1, but
88,
I'm
88% up there, Mark, and Nasdaq 100 between 61.8 and 78.6.
yeah.
Didn't quite get there. So, and then Russell, like you're showing with the value line, didn't even fill the gap yet. That like value line didn't fill its gap.
Yeah, so this will be, the area right down near 4,600 or so, where if
Yeah,
we get down under that, then I'd have legitimate concerns about this entire move from November really being replicated on another move lower, which could get to right around 4,350, probably at a maximum, and then we turn higher after right around Christmas time, because there's a lot going on. I think that week from the 20th to the 25th.
dare I say the solstice, the Fed, a GAN day, all of that around there.
Yeah,
Fed,
there's a
yeah,
lot of there's a pretty important cycle that hit back in the middle part of February and also in mid-June that seems to have affected technology quite dramatically, as well as a lot of the social unrest that we've all been feeling, and that rears its head up again in a couple of weeks. So, the last couple of times it was a top to the market. This time I think it's probably a good low, and we actually churn around for a little bit, and then we can have a pretty decent Santa rally into the beginning of next year.
You know what I wanted to ask you about, Mark, is last time we spoke, dollar, I don't know, was trading 93, 94, and you had a 96 target on the Dixie, which was halfway back. I'm wondering if you've revised it to the upside. And do you think that if this is a bear market rally in the dollar, that we could be close to terminating, and the story for 2022 might be what people thought 2021 was going to be, and that's a big bear market for the dollar?
I
Is that
think that's
possible?
probably right. I think that, I need to see a little more. I think we're going to get over 97, maybe to 98, but not in the short run. I think that we've sort of peaked out back on the 23rd. So I think we're going to trace out a little, ABC type formation, and so that could take us down from, probably down to right under 95. And then we likely are going to start what I think is going to be a final push up. And at that time, that'll be really time to sell into everything,
Is a weak dollar going to be bullish or bearish equities? I mean, traditionally it's meant risk on. Will it mean risk on next year?
I think in the first part of 2022, it likely will. I think, with technology strength, let me just show you a couple things. So this is the dollar. I'm expecting a minor pullback over the next couple weeks, and then for the dollar to start to turn higher into probably 97.5, 98, and then I think we have a legitimate chance of really peaking out for this whole move. But with everything, we need to see trends break. My thinking with yields are that this move is complete, and we should actually turn higher and test 175, if not get above that, and start to maybe push up to 195, 2% in that. Let me see if I can share another
your
screen
charts
with
that you're using now, Mark. They're very clean.
I use Optima, and I'm using TradingView. I use stock charts. I use a little bit of everything. So this is technology. This is something I always like to show, which is just equal weighted technology over the equal weighted S&P. And just since the month of May, it's really, tech has just been on fire. We sort of bottomed where we needed to, and now we're starting to really turn up again. And this is, we're set to break out of the highs of this entire trend since really the month of May. And that's really interesting at a time when tech is 27% of the market. And we can see it with what's happened with some of the semiconductors and everything else. But, this is what's happening with Apple. Apple has really been so dominant within the indices. And now that's starting to turn up and break this entire, trend channel, that we've seen. So interesting times. I think that we're at a time when growth is still going to show a lot of strength. This is large cap growth versus value. And so it's still going to pay to be in large cap growth. If you look at mid caps and small caps, it's not as pronounced in favor of growth, but certainly large cap. And EEM, I think, you're gradually trying to bottom out in momentum here. This is emerging markets versus developed. So I think you're going to start to see a time when the dollar rolls over. This is going to be pretty good for emerging markets, and we'll start to see this lift. So, that should make a good case for China and everything else. And small caps have just completely unraveled in the last few weeks. And now we're trying to stabilize here. And I think we can have a little bit of a bounce in small caps. But the broader trend is still pretty negative. And, we noticed that, of course, the Russell 2000 attempted to break out and that failed. And it really held where it needed to in the last couple of days, as well as Valueline. So those are pretty good areas of support for those. And I don't, we could obviously see a little bit of a bounce off that level, but just very interesting. And the FANG index really explains it all. This is from November. So we gave up a lot of strength, but we really looked to have bottomed exactly where we needed to in the FANG. We've had a good push off these lows on an absolute basis, but the relative, which is shown below, has really flattened out pretty dramatically. And so, it doesn't mean that, it's time to sell the group. If anything, we remember, if we think back towards the 1930s, over the next 5 or 6 decades, and everybody complains that Apple and Microsoft are too large of a percentage of the S&P. Well, we had, AT&T was the number 1 or 2 stock for about 6 decades, starting in 1930. So if you look at General Motors, General Electric, and we've had times in the past where we've had tremendous amount of concentration, in the indices, and that didn't necessarily mean that the market was overdone or we needed to have a substantial correction. So this is not necessarily new news. It's really old news. It's something that we've experienced for the last 100 years. It's just in the last 20 years it hasn't been as pronounced up until the last few years, where now all of a sudden it's Apple and Microsoft and Google.
Okay, so I also recall from our last interview, correctly said that not to look for we were going to see new highs, and that happened. And 2021, was going to be a good year, because at the beginning of the year there were maybe some different ideas, and you were a little bit more concerned about what might happen in 2022. You still feel that way?
Well, I think it's always I don't want to give away any of the secrets of my annual forecast, which will be released another month or so. But let's just say
Okay.
I still I think until technology breaks, it's going to be really difficult to claim that we can sell the peak and that we're going to sell off. I just want to see more proof of that, and so I'm a little more subdued. I think the weakness is going to happen in the first half of the year, particularly from March into probably July. And so I'll show you a chart real quick that
I've interviewed some people that, super bulls that have melt up targets like, 53, 5,400, and they're even revising those up because they believe that we're going to have a parabolic advance before it ends, and it's most likely going to be monetary policy that changes it. But that's a lot of upside from here.
Well, I think the market certainly has flattened out pretty dramatically, and this is Gann's mass pressure index using my my different cycles, and I have about 5 or 6 in there. And so this peaked out in the months of really April, May of this past year, and we saw the bigger sell-off into October the 4th. This bottomed right on schedule. It peaked out in November, also right on schedule, and it's showing us pretty choppy in December. It's not going to be straight up until probably right after the solstice period into the beginning of the year. So that's my 2021. This is always something I think that people should pay close attention to. And so I'm going to be releasing in reports to clients, what that looks like for 2022. And
did you develop that Gann mass pressure line?
This is a composite that is freely available through Optima, and users can put in their own inputs as to the cycles they wish to use.
Right.
I would simply say that just making common use of looking at 10, 20, 30, 50, 60, 80 year cycles and overlapping them tends to give pretty good results. But the 60 year is what's approaching, I think, next year. And that, for those that remember 1962, and the market actually peaked out in 61, but we had a pretty rough first half of the year before bottoming. So not to spoil the thunder, but I think the period between March, April, and July is really going to be, could be sort of nasty next year. And so that's going to be, the market could go sideways. I think it's going to go higher starting, after Christmas, and we'll start to push up. But if anything, it's going to be a choppy first few months of the year, in my view. And then we have a little bit of weakness, and we'll see the extent of that weakness. I'm not one that tries to sell the top. I'm always one that sort of calls out the price action as I see it. And if markets and technology start to break down, then it'll be proper to pay attention to that. But
are we getting close to some type of low in miners?
Yeah, that's a tricky call. I think that as with everything, I want to see proof there as well of what's happening. And I think gold is probably going to be close. I really want to see rates pull back along with the dollar at the same time. That's usually what sort of fuels the metal trade. And right now we just I think rates in the next few weeks are going to actually move higher. So I think GDX, if you can use 29 as a stop, then Let me see if
Yeah.
I can share. This is just another, we'll share this same screen with GDX. So yeah, it just makes for a tougher call as to why you want to be long, at least currently. But, I think there's going to be plenty of time.
Yeah, I'd like to see one more low with a dollar high like you, Mark. See
Yeah, I
what
think
it's
that's
doing. Yeah.
right. I think that love to see a flush and buy into that. I
Yeah.
think that the precious metals certainly have been the last to join the party of the commodities, and the move in crude is a little bit of a concern. I think any sort of further rally from here, and we very well could replicate that and have further weakness into early next year before we bottom out. So I share Tom Lee's view of being long-term bullish on energy, but we have had what I view as to be, a completed move up off the March 2020 lows, and this is just starting to correct. And so, we've seen the first move down, and now we're bouncing, and we'll see if this is replicated before we have the larger move up to the hundreds.
Okay. So I hope you're going to be able to freely express yourself at all times, Mark, because I think you have a lot of great insights that you have to keep up an image, and you don't want anyone take a picture of you with a tinfoil hat on. I understand that, but you're one of the best technical, holistic, look at everything type of analysts that I interview. And one of our attendees wants one more look of your Dixie. If you can do that before you go, and everyone could still follow you. You still have the same Twitter handle, Mark Newton CMT. Anywhere else where they could get a hold of you or
Well,
everything?
I would say simply go to fsinsight.com. And so let me see if I can pull that up real quick and give you.
Okay, there you go, guys. There's the dollar. His dollar. Let's look at
the dollar real quick, and then I'll share some. So I think this is honestly how things are shaping up, and I believe you had Blake on last. I had fun talking to him a couple months ago, and so I think he's getting long the euro, and so this pullback in the Dixie, goes hand in hand with exactly what he's talking about also. So I think you have a little bit of a correction in the dollar in the short run, and then we have a final push, and I'm not certain how, based on where this ends, I'll be able to make a pretty good projection on what I expect and what how far this should run. But when you look at the bigger picture,
I think
I do
10,
believe
61, 8 big. Yeah.
I do believe this is going to be the final push up of, and this is probably the incorrect labeling. It's probably, if anything, this is an ABC, and we're doing 5 waves up on this final, and we finished 3, and then we're going to do 5. And so this is probably a little more accurate because this is not really all that much of an impulse.
Well, a weak dollar will certainly throw gasoline on the fire of what isn't transitory inflation, don't you think, Mark?
Yeah, I'd be interested to see exactly how that shapes up. I'm no economist, but obviously we all know parts of the economy are transitory and parts aren't. And so if the stock market starts to weaken the first half of the year, that's going to throw, a little bit of water on that argument. And also if crude oil has any sort of larger sell-off in the first couple months of next year, and that's obviously a huge component of how we view.
But it's such a small part of the market now.
Right, it's a small part of the S&P, but it's large in terms of how we view,
the global economic growth. Anything that you're worried about overseas, like China or anything?
Well, I don't think China's going to be put to the test under this administration
until after the Olympics.
They're going after the wrong party. Unfortunately, I don't think Russia really poses much of a threat to anybody. And instead of going after the Ukraine, they'd be better suited to protecting the border of Texas, not the Ukraine, honestly. But that's my own personal view.
Okay.
I think, that's the big story these days is what is, if the Ukraine, if the U.S. pushes for Ukraine to get into NATO, that's not going to make Russia too happy.
Yeah.
I really don't know in terms of the geopolitical scene and what.
Yeah, I was just talking about economically what China was doing with, you know, basically, you know, taking down the proletariat and you know, draconian rules in the markets. And I know they've come back, but some of the damage to their equity markets, and they're deleveraging that Xi
Yeah.
is behind. You know, I remember back in 2007-8, everyone was saying, well, you know, China wasn't affected by the housing crisis and the toxic paper, and they were still growing. And because of that, they're going to help pull the rest of the world out of this recession with the help of central banks, of course.
Right.
So if they can pull us out of a recession, can they take us into one? They're bigger now, bigger percentage of global GDP than
Yeah,
they
that's
were in
that's a that's a
08.
tougher call. I'm not really willing to weigh in on that. I
All
don't look
right.
at the world that way. I
You
wouldn't be able to
pleading
give
the
you
fifth on
any
me, Mark?
advice.
Huh? Are
I
you
think,
taking? All right,
so
buddy.
yeah, I would encourage everybody just to go to fsinsight.com. This is how you can reach me. And you know, I publish a piece every day. I do a 5-minute
Nice.
video. If you look at FundStrat, that's just one wing that serves the retail arm of FundStrat. And so, you know, I work with Tom. You know, for those that like crypto analysis, I do my technicals and a crypto piece every morning. And you know, I'd encourage everybody to you know, take a look. And there's lots of great stuff, whether it be interested in quant or crypto or macro or you know, we sort of have the gamut covered, as well as policy. We have our own Tom Block in Washington, who covers, who's an expert and has been involved with politics for the last, you know, 50 years or so. So
Tom is very reserved on CNBC when he comes on. Does he get wild at a Christmas party?
I'll tell you more after tomorrow night.
Mark, so great talking to you. I wish you and your family, you know, Merry Christmas, Happy New Year, and all the success in the world. If I was Tom Lee, I would have brought you on as well. So
Thank you. I appreciate that. And best to you and yours and to everybody out there listening and tuning in.
talk to
Happy
you in the
holidays.
spring.
And yeah, let's look forward to a good year. Let's get past all this craziness and hopefully we can all get on with our lives sooner than later.
Thank you so much. Mark Newton, everybody.
Take care.
Thank you, buddy. So that's a wrap for today's Wednesday, right? Yeah. Okay. So Mark was great, like usual. Thank you guys for your attention. Good luck today and good hunting. And in 19 minutes, you could go join the best team on the net in the Morning Edge. How many people took the $1 trial? I'm just trying to get together my cash in case I have to, you know, do any refunds. I'm counting $1 bills right now. So let me know if you join so I have my reserves ready. Okay. I doubt anyone will, you know, be disappointed. All right, Alexander, take it easy. Paul, Jeff, thank you, Monica, Laura. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.